Imagine you bought a ticket for a theme park ride called the Data Center Express. At first it crawls through a serene meadow of server racks and humming fans, then boom, a thunderbolt of AI demand launches the ride into a vertical loop. You cheer. The ride peaks, the view is spectacular, pundits chant, infinity. Then it drops, hard, because someone in the control booth said, "Whoa, we misplaced a few design wins and must move them to the next car." That, in investor speak, is Supermicro computer, NASDAQ, SMCI, over the last couple of years. SMCI sits at the weird, wonderful intersection of insane growth expectation and execution sensitivity. It benefits enormously when the world decides to buy lots of AI servers, and it gets punished painfully when timing or sentiment slips. What Supermicro computer actually does, spoiler, it builds the machines AI eats. SMCI is an assembler and integrator of advanced data center hardware, server chassis, motherboards, specialized GPU servers, high-density compute bricks, network fabrics, and closely related infrastructure. Think of SMCI as an upscale server tailor, not the folks who make every laptop in a mall, but the custom atelier that stitches together high-performance, efficiency-tuned systems that hyperscalers, cloud providers, and AI groups want when they need extreme compute density and fast time to deployment. When AI demand surges, the buyers aren't ordering commodity laptops, they're ordering racks of GPU-heavy servers, cooling systems, and racks designed to cram more compute into fewer watts. That's SMCI's sweet spot. Why the company's exposure to AI is both a blessing and a curse. When customers like hyperscalers, large cloud providers and social platforms investing heavily in compute decide to expand AI capacity, they place jumbo orders. For a supplier like SMCI, a single large program can move the revenue needle a lot. It's the difference between selling 10,000 pizza slices and landing a deal to feed a whole football stadium nightly. Suddenly, growth forecasts look like a fireworks show. But here's the rub, the spending is lumpy, timing is everything, and investor sentiment treats mistiming like betrayal. A few common triggers for the volatility you've seen. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Design win timing. Customers award design wins when they decide which specific server designs they'll buy. If a design win is delayed, the expected revenue moves with it. Picture SMCI as a baker told they'll sell 200 wedding cakes in March. If the wedding moves to June, the bakery's Q1 suddenly looks lean. Investors hate moved weddings. Customer concentration. A handful of big buyers can dominate orders. If one breathes in differently, the company feels it. Competition. Other server builders, large incumbents and regionals, can undercut pricing, bundle services, or compete for the same design wins. Sentiment and narrative. In the age of social media headlines, one note about missed queue can cascade into margin calls and automated selling. Prior reputational problems. As you mentioned, SMCI has had previous accounting and compliance issues. Even after fixes, the memory of those hiccups makes the market quicker to judge and less generous with the benefit of the doubt. So SMCI is like a high-performance sports car, thrilling when the road is clear, terrifying if someone slams on the brakes. The 2025 surge, why it almost doubled at the top. In 2025 SMCI rode the AI wave hard. The narrative was simple, AI equals GPUs equals servers equals SMCI. Investors piled in, valuations expanded, and the stock nearly doubled at its high. Why did that happen? AI optimism. As generative AI, large language models, and inference workloads boomed, the immediate demand for GPU farms skyrocketed. SMCI's product mix, dense GPU servers and specialized cooling and power designs, positioned it as a key benefactor. Fast re-rating. When growth is expected to accelerate sharply, multiples expand. A company growing revenue rapidly can command a much higher price-to-earnings or price-to-sales multiple than a steady one. Momentum/speculation. In bull markets, momentum feeds itself. Short-term traders amplify moves, and headlines create FOMO. SMCI's narrative as an AI play made it a magnet for such flows. Design wins and backlog. Design wins announced and large backlogs can make future revenue look almost guaranteed, and investors really like guarantees, even if they're probabilistic. But when you have a rocket ship like that, even small signs of friction cause turbulence. Who's saying, "Don't be a hater"? Stone Fox Capital's bullish take. Enter Stone Fox Capital, a top investor, pseudonymous but influential, who says SMCI is being unfairly vilified. Don't be a hater. Their core thesis, summarized from your input and restated plainly: data center demand is massive and ongoing. Stone Fox cites initiatives like Meta's Meta Compute plans and third-party forecasts that data center capacity is expected to increase materially through 2030. If customers are committed to building hundreds of gigawatts, GW, of capacity, they will need servers, lots of them. SMCI's TAM and product alignment. Stone Fox believes SMCI's technology will pick up a meaningful share of this rising CapEx spend, especially for AI-optimized hardware. Short-term hiccups equals buying opportunity. Because the company remains exposed to strong AI server demand, Stone Fox expects SMCI to beat fiscal targets for FY27, per their view, and to be re-rated upward as results show growth, meaning the market multiple would expand again. Valuation and risk appetite. The investor recommends using weakness to buy, implying they view the reward-to-risk ratio as attractive. Stone Fox's view is classic growth investor logic: buy during fear, hold for future beats and re-rating. It's bullish and depends on execution returning to form. Why the macro and CapEx story matters: McKinsey, Meta, and the GW metaphor. Stone Fox, and many bulls, point to an industrial-scale CapEx story. Large tech platforms and hyperscalers are building data center capacity measured in gigawatts. Let's translate that into plain English. A gigawatt of compute is not a light bulb. It means enormous power budgets, cooling infrastructure, and racks upon racks of GPUs and specialized servers. If McKinsey's forecast, as cited, from 82 GW in 2025 to 219 gigawatts in 2030, holds true even partially, then the hardware market's cake is getting a lot bigger. SMCI can grab a bigger slice if their products match customer needs. Meta's Meta Compute is an example of hyperscaler commitment. When customers announce multi-year infrastructure plans, suppliers can model multi-year demand, and SMCI could be in line for sizable contracts, and we could symbolically say it is 200x potential. But the key is, the cake must be baked into tangible, recurring orders. Forecasts are glamorous, but bookings are hungry. Note this as well. Do you want peace at heart? John 1:29 tells us that, the next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.